On today's episode, we're talking about, can you put down 3% to finance a multifamily property? Let's get into it. Welcome to the Aparti Fi Podcast, the show where we show you how to use other people's money to finance your multifamily deals. On today's episode, we're talking about, can you finance a multifamily property with 3% down? Let's get into it. So, when financing a multifamily deal, a lot of sponsors want to know, how can I get the highest loan proceeds with the least amount of capital down, or the least amount of capital out of pocket? And the answer to that question is very simple, but we're going to go into it. We're going to play this thing out. We're going to go into the podcast and we're going to take you down a journey. So, let's start in the residential space. In the residential space, you hear that you can buy a multifamily deal and you can put down 3.5% and you can house hack and you can rent one of those units out and live in one of the, you can, rent the other units out and live in one, and somebody else is paying your mortgage. That is true. So, you can use that type of financing and you can do those type of deals. But those type of deals are considered residential real estate deals, meaning that you're getting that home loan, you're getting that loan as your primary residence, meaning that you can qualify for a FHA loan and you can put down 3.5% if you're buying 1 to 4 units as a property. Now, what we talk about here on Aparti Fi, or what we specialize in here at Aparti Fi, is investment property loans. And investment property loans are loans where you buy the property specifically for the purpose of earning income from that property. So when we talk about multifamily, we're talking about multifamily from 5 units and up. If you do 5 units and up, that is considered commercial multifamily. If you do 4 units and below, that is considered residential multifamily. Residential multifamily, you can use that as your primary residence and you can live in the property and fix it up and do all the other stuff. And then with commercial multifamily, 9 times out of 10, you don't use that as your primary residence and you only purchase the property with the intent to make money from it as an investment. So now that we got that out of the way, yes, you can put down 3.5%, but that's only when you're doing a residential multifamily deal. Now, the question is, can you do that with a commercial multifamily loan? Can I put down 3% with an investment property loan? The answer is, it depends. So, you can put down 3% with a commercial real estate loan, with a commercial multifamily loan. But it's not how you're thinking that you can put it down. So it's not the way you're thinking about, meaning that the bank is going to give you 97% and you're going to come and say, here's my 3% down. Now let's get into it. So when financing a multifamily deal, 9 times out of 10, the banks want you to put down some form of down payment. That down payment can be 25%, 20%, and 15% down. Sometimes you can even get a bank to allow you to put down 10%. So there we have it. At some point, when financing a multifamily deal and getting a multifamily loan, you're going to have to put down anywhere from 10 to 25% as a down payment. Now, the question becomes, how can I put down 3% as a down payment? So if you only have 3% of the equity, how can you put that down? This is where your expertise comes in at. This is where financial engineering comes in at. This is where bringing on advisors or working with mortgage brokers or capital advisors to fund your capital, to get your capital stack up. This is where mortgage brokers come in at. This is where we come in and we make the deal work. Okay, so if the bank is going to require you to put down 25%, that is okay. But they didn't say that it had to be your 25% that you put down. So this is where you can go and raise equity. So there's a lot of different ways you can get this done. We're going to talk about 2, which is preferred equity and common equity. So the difference between the 2, we're not going to talk about on this podcast. Join me on the next episode and I'll tell you about the difference between preferred equity and common equity. But for this for this particular situation, you can put down 3%. This is how you do it. So the bank says that you must put down 25% as your equity piece. They didn't say it had to be your equity. So this is what you do. You go out and you can do a syndication where you syndicate deals, meaning that you go out and raise money for a one-off deal and you get investors to invest in your deal, and then you pay them a percentage for investing. You can raise a multifamily fund where you go out and raise a multifamily fund. You go out and raise a pool of capital to do a specific amount of deals, and then use that capital as your equity payment. So let's say for the purpose of this example, you're going to do a syndication, meaning that you're going to raise capital for a one-off deal. You're going to raise capital for this deal, this one deal specifically. So if you're doing this and the banks, you go to the bank, you come to me and you say, can you get me a mortgage? Can you get me a loan? And I'm your mortgage broker. I say, okay, I can get you a loan. The loan is this, this, and this. The bank wants you to put down 25%. Now you're like, okay, I don't have 25%. So what do I do? Now you say, okay, I can raise money. No, then the next question is, how much do you have to put down? You're like, I only have 3% to put down. So then, okay, we take your 3% and you say, okay, I have 3% to put down. And now I need to raise 22%, because I can put down 3%. So now you go out and you start raising capital and you start telling people that you're doing this deal, and you raise money from accredited investors. You talk to your syndication attorney. They get all your paperwork drawn up. And now investors say, how much you put into this deal? You say, I'm putting down 3%. I'm putting 3% of my own money into this deal. So now you want to buy this deal. You have 3% down. You put it in, and then you raise the other 22% from other investors. And then once those investors come in and give you 22%, you add your 3%. Now you have the 25% of the equity. You take that, go to the bank, pay for your go to the closing table. You have your 25% down. Everybody's happy. Now, how did it work? The bank gave you 75%. You raised 22% from investors, and then you had your 3% as a down payment. That's one scenario. Now let's look at preferred equity or mezzanine financing. So when we talk about preferred equity or mezzanine financing, in simplest terms, mezzanine and preferred equity picks up where the bank leaves off. So if the bank says they'll give you 75% and the mezzanine lender says that they'll go up to 85% of the capital stack, what they're going to do is take away 85% minus where the bank left off. So if the bank left off at 75%, that means that the preferred equity lender or the mezz lender is going to bring in 10% of the required down payment, meaning that they're going to go up to 85% of the capital stack. And so what this does is, if the lender stops off at 75% and your preferred equity investor says we can get that capital stack up to 85%, now you're only left with 15% to bring to the table. And if you're left with 15% and you're like, I only have 3% equity, so what do I do now? Now you run the strategy that we just ran. You go out, you raise, if we're at 15%, that means you're going to have to raise 12. So you go out, you raise 12, you get 10% from mezzanine financing, and then you get 12% from common equity investors, and then you invest your equity, and now you have 25%. So this is where working the stacks come in. This is where working with the competent mortgage broker or a capital advisor comes in at, because you can optimize the capital stack and play with the capital stack and play within different layers to get you what you need. Yes, you may not be able to get 97% financing from the bank, but you can get 97% financing overall just by going to the market, just by talking to investors, just by speaking with preferred equity lenders and seeing where they stop at. And then once you have all of those pieces in play, you can put down 3% for a multifamily deal, and everybody's happy. So to answer the question, yes, you can finance a multifamily deal by putting down only 3%, but you're not financing that deal in the traditional way, meaning that you're not going to go to a bank and the bank is going to give you 95%, 97%, and you're only going to put down 3%. No, you're going to have to put together a capital stack where you go to the bank for some of the capital, you go to a preferred equity lender for some of the capital, or you go to the bank and investors for some of the capital. But it is possible. It's just figuring out how the layers work. Can the deal support paying all these investors back? And if it can, you can definitely put down 3%. So that is it for today's episode. Make sure you leave a like, a review, and subscribe to the podcast, and I will see you on the next show. Thank you.